I want to get into a little bit of swaps. I know it seems like a technical term, credit default swaps, collateralized debt obligations, securitized debt mortgages. What we're going to do is simplify it for everybody. Has anybody have a house mortgage in this room? Anybody own a home and got a mortgage? All right, well, we're going to break it down real simple. You guys know the difference between a fixed mortgage and a variable rate mortgage? So if you get an adjustable rate mortgage, your interest rate is going to go like this, right? If you get a fixed rate mortgage, your interest rate is going to go like that. Maybe you lock it in at 3%. It's been lower or higher depending on what year you're doing it. CPS takes out bonds to build schools and to, fund its facility expenses. They take them out as a variable interest rate bond. So it fluctuates, right? So since 2003, CPS gets in these deals. Sometimes they last 20, 30 years, where they tell the bank, we're scared that even though our interest rate's 4% now, it's going to skyrocket to 10% later. So we're going to switch out a fixed rate for the variable rate. So what the banks say is they say, okay, we'll give you a deal. We'll give you an interest rate that's higher than most fixed rates, but lower than where it could go in your variable rate. And if it goes higher, we pay the difference. If it goes lower, you pay the difference. So this is what they do. CPS locks it in at roughly 4 to 5%. And they've done this since 2003. Now from 2003 to 2008, it was an okay deal. They were losing about $500,000 a month. Now they're losing about $2.5 million a month. Why? Well, let's take a look at it. Why is this a bad deal for schools? Here's what ends up happening. You've got this fixed rate. Interest rates in 2003 might be slightly above it. What happens in 2008? Does anybody remember financially to the economy? Went all the way down, right? All the foreclosures we're seeing. So here's what happened in interest rates. So here's what CPS is paying. Here's what the bank's earning. Whose fault was it? Should CPS be paying this amount? Here are the banks that are earning $36 million a year. Bank of America, the Royal Bank of Canada, Loop Financial, Goldman Sachs. These are the kinds of banks that are making this money. Guess what? These are the same banks that crashed the economy in 2008. What happened to them? Do you remember what happened to them when the economy went down the tubes and they were suffering and about to go bankrupt? They got what?
They got bailed out.
They got bailed out. So here they get in trouble. They make a risky bet and they get bailed out. The schools make a risky bet and they pay through the nose. And they have to close 60 schools. And the district says, this was a good deal. Right? So what we're arguing is that it's CPS's obligation as stewards of the educational system to say these banks have a moral obligation and duty to renegotiate the terms of this loan. They set this up, and now they're making money off of closing schools, essentially, right? Because they're refusing to renegotiate these loans. Bank of America alone has made $4.8 million a year off these toxic swaps. That's enough to keep 9 schools open. So what do you think if we walked into the Bank of America across the street right now,
awesome,
and stood in line and gave the bank teller a letter to Tim Maloney, the CEO, and we said, we'd like to withdraw $4.8 million for the schools, and see what they say.
Whose schools? Our schools! Whose schools? Our schools! Bank of America, we're no fools! We won't let you close our schools! Bank of America!
We could do a little chanting. We could demand to speak to the manager, and we can let them know that we expect that letter to be delivered to the CEO here in the president here in Illinois.
Whose schools? Our schools. Whose schools? Our schools. Take America, we're no fools. We won't let you close our schools. Take America, we're no fools. We won't let you close our schools.
You know, we can't let Mayor Emanuel off the hook for this. This is really unethical, and it's actually going to kill people and destroy their life opportunities. So the communities that are most underserved, that have been most divested from, that are the most harmed by these policies, are having to destroy the schools in order to help his Wall Street buddies. Right? How does that make any sense? We have the assistant manager here ready to speak with us. So you should introduce yourself, let her know why we're here. Let her.
We would like to talk to you, ma'am. Well, I have a letter here, and we would like to make sure that this letter gets to Mr. Tim Maloney on behalf of the Chicago Public School children. We would like to make a withdrawal today of $4.8 million in the money that Tim Maloney owes us. But if you can make sure he gets this letter, and we need to make sure that he gets this letter and he hears from us, because we need to hear from him.
Okay.
Will we have a commitment that Tim Maloney will receive this letter?
Yes.
Ma'am, I need to know that Tim Maloney will receive our letter.
I'm speaking to my representative now. Yes, thank you.
We have people who invest in this bank, and we need to know that Mr. Tim Maloney will receive our letter, and to let him know
yes,
that
I will do
he
that, but we
needs
have
to
procedures that we have
answer.
to follow as well. So I'm speaking to the representatives to get that letter to that person.
The CPS is paying about 100 times what the banks pay in terms of the interest rate on these deals. So when people say, well, you know, CPS took a risk by engaging in these toxic swaps, what could we say in response? Didn't the banks take a risk on all of us? And they got away with it. Not only did they get away with it, we gave them money to help them out of the problem they created. So I think they owe us quite a debt of gratitude, don't you? The least they could do is renegotiate these swaps.
Excuse me, sir? Oh, okay. Would you see that this gets to Mr. Tim Maloney, please?